Alright guys, in this video we're going to be covering fair value gaps and inverse fair value gaps, okay? Before we go into fair value gaps, I realized I was missing a few points from my last video. This was our last video. We were talking about trends, and we were talking about market structure, right? That's what we're talking about. I missed one point. So the point I missed was ranging market, where we have no proper market structure. So this is a bullish market structure. This is a bearish market structure. What a ranging market structure look like is this. Remember we talked about accumulation? That's a ranging market structure, guys. Okay? We don't trade ranging market structure. We don't trade that, right? For us, for our strategy, we don't. Some people, scalpers, love it, like love this range trading. Like they take advantage of this. But our strategy will get cooked if we trade in this range. Okay, we have to wait for a break in the range before we find some sort of setup. Okay, I repeat, this is ranging trend. We don't trade that. Once you see that, we don't trade it. Let's try to find an example in the charts here, guys, so you know. Here, this whole thing. See how we're in range? Scalpers love this, right? Oops. Sorry, guys. I don't know where I went. Don't know what happened there. Oh, here. There. Scalpers love this. You see how it's generating liquidity? Like here, here, here. That means there's stop losses here, stop losses here, stop losses here. Stop losses in this range. Okay? You guys see that? So that's a range. We don't change that. We don't trade that. We have to find the break in the range. So this one broke that range, and look what it did. It broke this range and it retested. Break, retest, and trend continuation. So sometimes trends can do that, guys. Trends can do that. Trends do this sometimes. Break, retest, boom. And what we saw here was a break, retest, trend continuation, right? We have to wait for those types of setups. But sometimes as well, this is what price can do, right? Markets are tough to predict sometimes, especially in the range. That's why we gotta wait for the market to move out of this range. Sometimes market likes to manipulate, go back to the range for the real move, right? Remember what we talked about before? Accumulation, manipulation. Manipulate means a fake move before the real move. The real move is a distribution, right? We didn't get any manipulation here. This one just a trend continuation. So that was the type of yeah. So that's a ranging market. We don't trend that. When price broke that, you see, boom, we're in an uptrend. We're in an uptrend. Let me clear this up. It's kind of messy. We're in an uptrend. See? Up, down, up, down, up, down, up, down, up, down, up, down, up. Boom. We're in an uptrend. You see that? Let me change the color here. We're on a bullish trend now. If we do the same thing here, there's a highly likely that we will go in a downtrend, right? Same thing as this. This one decided to go. The market, went in an uptrend and went all the way up. So, yeah, we don't trade that. We trade here, like in this area. We ICT traders, we trade here. Okay. This is what we trade. We trade trends. Okay? Let's look for a downtrend example. This is a good downtrend. Downtrend. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. You get the point. Lower low, lower high, lower low. Okay? Lower high, equal lows, change in the state and all that stuff. Trend reversal. Okay? So you guys get the point. Let's change this to red. Yeah, that's the bearish trend. Lower low, lower high, lower low, lower high, lower low, lower high. Alright? So that's our market structure. So just to recap, we trade this bullish market structure, we trade this bearish market structure. Okay? We trade this. This we don't touch. We wait for a reaction of trend continuation, whether if it's going to be the upside or if it's going to be the downside, and then we look for entries. Okay? We do not trade that. Okay, that's the end of market structure. Now we are going to go for fair value gaps. Get rid of these. For fair value gaps, what are fair value gaps? Basically just gaps. They're just gaps in the market that needs to be filled, because remember, there's one of the reasons that market move is fill fair value gaps or fill imbalances. So technically what they call this is an imbalance in the market. It needs to find equilibrium. You know, like when your body, when you get sick, it's not at an equilibrium. Your body tries to heal itself to get back to equilibrium. That's exactly what the market does, right? These are imbalances in the market that eventually the market's going to come back to, and to rebalance it, and or another word for that is to refill it, and so it can go back to equilibrium. Yeah, does that make sense, guys? Hopefully that makes sense. So fair value gaps are just gaps in the market when a lot of big buyers entries, like make enters, you get this big gaps, right? And they're magnets for prices to go back to, because the market wants to refill it. Yeah, the market wants to refill fair value gaps. That's all you have to know about fair value gaps. You have to really get good at finding fair value gaps too. I would suggest practicing like this. Practicing, go on FX replay or go on the regular chart and just practice finding fair value gaps over and over again till your head knows what fair value gap looks like, right? It's all pattern recognition, right? You gotta be quick. The faster you find these things, guys, the quicker you learn these concepts. So I suggest doing this. Just practice over and over again. Go in the market, practice finding fair value gaps for your brain to identify these. Over time, you'll identify a lot quicker, guys. Trust me. Fair value gaps, fair value gaps, fair value gaps, and fair value gaps. Just like that. Go in FX replay and find fair value gaps over and over again, okay? Next topic, inverse fair value gaps. What are inverse fair value gaps? Inverse fair value gaps are fair value gaps that literally gets inversed over here. What does that mean? Okay, this fair value gap, this is called a bullish fair value gap because it's a bullish candle, right, with a fair value gap. This is called the bullish fair value gap because it's a green candle with a fair value gap. Okay, that's why it's called the bullish fair value gap. And it becomes an inversion fair value gap when a bearish candle closes, see, this is the border of the fair value gap, closes below this fair value gap. Okay, we got a bearish movement closing below this fair value gap. Did you guys catch that? I'm going to repeat it myself over and over again until you guys understand. An inversion fair value gap is when this bullish fair value gap gets run through, meaning the opposite candle, in this case bearish, closes here. This candle closes below this fair value gap. Why is that important? Why is that important, guys? Listen closely. This is really, really crucial. So when this bullish fair value gap went up here, that means that there is a strong bullish momentum, right? A bullish fair value gap means that there is strong bullish momentum. However, when the opposite candle, in this case bearish, closes, in this case this candle, this is invalid because it closed before this fair value gap. It's not inverse yet, so we had to wait for this candle to close for this to become an inverse for fair value gap. Okay, you have to wait for a full candle close. Make sure a full candle close for this to become a valid inverse for value gap. Okay, and when that happens, guys, that means it's no longer bullish. We are possibly it's the market signaling us of a possible trend reversal. Possible. It's not 100% yet. It's just the market telling us that there is currently a temporary change in order flow from bullish to bearish. You guys understand? Let me repeat that. An inverse fair value gap indicates us that there is possibly there is a change in order flow, a possible temporary change in order flow from bullish to bearish. When a fair value gap like this gets inverse, get run through, okay, that becomes an inverse fair value gap. There is a possible change in order flow. Possible, okay? I want you guys to catch that. Very, very important. Let's find another. So this is the bearish inverse fair value gap. Let's find a bullish inverse fair value gap. Say we're buying, right? Say we're buying. Okay, here. You see how this bearish fair value gap over here, you guys see that? Boom. We get the opposite candle. In this case, this bearish fair value gap, this bearish candle, gets run through by these bullish candles. You got a green candle, this candle over here, closing above this bearish fair value gap. So currently it's a fair value gap. Currently it's a fair value gap, okay? Let me replay that. Okay. It's still a fair value gap. It's not an inverse fair value gap. It's still a fair value gap. This is still a fair value gap, okay? You want to wait for this candle to close, for a green candle to close above it, for it to become an inverse fair value gap. Okay? Boom. So we got this candle here to close above this fair value gap. Now this is no longer a fair value gap. It's an iFVG, or an inverse fair value gap. Okay? Let me repeat that, guys. I need you to get this, really get this in your head. This bearish fair value gap, okay, this bearish fair value gap gets run through by these green bullish candles. Okay? It's not valid yet. We have to wait for a green candle to close above this fair value gap for it to become an inverse fair value gap. Why does this matter? Why does it matter? Because is the market signaling us that before there was a bearish trend, there was a bearish push, but when we get this fair value gap get inversed by this bullish candle, that tells us that there is a possible trend reversal, that there is a change in order flow where the market is telling us that there is a temporary change in order flow, that in which we are temporarily going from bearish to bullish. It's not confirmed yet. Okay, it's not confirmed yet, but it's the market hinting us that there's something happening in order flow where it's changing from bearish to bullish. Okay, the most important part here, guys, is understanding about candle closures as well. As you can see, let me repeat this. I know I already said it, but this is so important. This is not an inverse fair value gap yet, because this hasn't, we haven't had a green candle close above this. Okay, it's not an inverse fair value gap yet. Boom. Since this candle closed above this fair value gap, now this is an inverse fair value gap. This fair value gap got inversed. It's called an inversion. Okay, hope that makes sense. Okay, that's all you have to know about fair value gaps. That's all you have to know about inverse fair value gaps and market structure. Important thing to know as well, when same as fair value gaps, with inversion fair value gaps, with the same as fair value gaps, these iFVGs can be strong support as well. Okay, these iFVGs can be strong support, meaning they can be strong reaction zones as well. So important thing to note. Or they can be strong resistance zones. Price can reject off that, right? You can look for trades going south when you see a strong reaction with inverse fair value gaps. Okay, all right, make sure you take notes. This is really, really important.